But the question has always been, when is it going to end? Because we're just constantly sitting there getting beaten over the head. The fundamentals say one thing, the fundamentals say something else, the fundamentals say this, and they're all lining up. I mean, for over a year and a half now, gold has been sitting there destroying the guys, the Bloomberg set or the CNBC set. So gold doesn't move until real interest rates go negative. Well, we've had negative real interest rates for over a year now, and gold still really isn't moved very much.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and I think you're in for quite a treat today. Finally got a chance to catch up with Tom Luongo of Gold, Goats, and Guns. He's put out an article recently of why he thinks the gold-backed ruble is going to be a big problem for the precious metals manipulation, which hopefully would mean an end to that sometime in the near future. So it was great to get him on there and talk about this, and I think you're in for quite a treat. Before we do get started, though, I wanted to mention that today's video was brought to you by BlackRock Silver, who you've seen on the show several times. That's Andrew Pollard, that is in the Tonopah West District. And here you see intersecting the Denver vein at Tonopah West. And as you hear here from Andrew Pollard of BlackRock, the latest assays from what is our largest step-out drill program to date have confirmed that this mineralized system goes well beyond the initial resource shell, far surpassing our initial targeting. So good news from BlackRock. Link to that press release, if you'd like to see the whole thing, review it for yourself, is in the description field below. And with that said, get ready, because here's Tom. We're recording on Tuesday, April 5th, probably seeing this Wednesday the 6th. So joined here with Tom Luongo of Gold, Goats, and Guns. So Tom, now the pressure is on because you're a day ahead. You're a day ahead of the future, and we can see how any of these forecasts come out, especially because you just recently wrote an article that has touched a topic that is on many people's minds, especially that watch our show here on Arcadia Economics. Not only what's going on with Russia and the ruble, but an interesting sentence you have here. But to be clear, Russia just broke the paper gold suppression scheme, which certainly would be welcome news to a lot of people. And excited to have you on in here to talk about it and share what you're seeing. So welcome on in, Tom. How are you?
Thank you, Chris. Thank you for the invitation. And we did this kind of impromptu. We were going to schedule this next week, but I had a little bit of time this morning. Happy to come on and fit that in. I was happy to like stop writing for about an hour and then go and do something else and break up the day a little bit. So this is great. Thank you.
Yeah, and that's also nice to hear that you were just writing, because I find sometimes we read for a while, then we write our thoughts out, and then vocalizing it afterwards. So sounds like perfect time to be digging in. And just to put things in perspective in terms of what I would assert, and we'll go into the supporting details today. Here's Tuesday's chart. Well, I know some people like their futures prices, and we'll dig into that as well. But I love the Kitco chart with the colors. Plus, it just kind of points out, I mean, here's, the thing opens Sunday night, and I mean, it's up to 24.85-ish, then just clobbered into this V shape, which we've seen many times. I would assert, that's what the spoofing is. People are being stopped out, jumps right back up, then rallies again last night on the green here. I mean, there's not anything happening in the silver market world that I've been able to find in my 13 years of research that accounts for this, other than the banks do what the banks do, which leaves us in that position of, all right, if we're concerned about the inflation, the wild money printing, the reckless stuff out of government, people are turning to gold and silver as a hedge or insurance against that. When does it matter? So why don't you take it from there, and you can share any thoughts you have.
So, I'm fully on board with everybody within this portion of the industry that says silver is the most manipulated market in the world. That's very obvious. And I think gold is the second most manipulated market in the world. I think the two of them together, create that dynamic to help keep the normies within the financial space. And I'm talking about normie investors and keep them from jumping ship, right? Because gold is the canary in coal mine that, we've all lost confidence in the financial system. But it's all built on this, pile of paper gold and paper silver, and the rehypothecation between, the COMEX, the LBMA, and GLD, and back and forth. And the same thing happens in silver, with it, using SLV as the medium there. And it's a story that we know well within this community. But the question has always been, when is it going to end? Because we're just constantly sitting there getting beaten over the head. The fundamentals say one thing, the fundamentals say something else, the fundamentals say this, and they're all lining up. I mean, for over a year and a half now, gold has been sitting there destroying the guys, the Bloomberg set or the CNBC set. So gold doesn't move until real interest rates go negative. Well, we've had negative real interest rates for over a year now, and gold still really isn't moved very much. Now has it? So let's chalk that one up. Oh no, it's all about the spread between the 3-month and the 3-year Treasury yield and blah 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 blah. That's my indicator. Fine, I've heard that one. I've heard them all, every one of them. And the only one that actually matters is the fact that is confidence. If people have lost confidence in the currency, that is the denominator of the gold price that you're looking at, then the price of gold eventually rises, because people start going, where can I put my money when I'm worried about losing, purchasing power? It's just that simple. And we're at a point in history where we have people in power that are purposefully undermining our confidence in U.S. political, financial, and judicial institutions. We had the Supreme Court was completely destroyed with the 2020 election. We've got Congress going out of their way to spend more money, spend so much money they would make drunken sailors blush in embarrassment. We've got forcing a Federal Reserve to monetize debt that it clearly didn't want to. And I know I'm in the minority within this community when I say that I think that the Fed is actually the most rational actor in every one of these in this situation. And I'll explain more as we go along, because I've been operating under the thesis for the last 9 months that the Fed is actually trying to break the Eurodollar market. And I'll explain why that's important to paper gold in a minute. But all of our valuations, our asset valuations, and everything else, we're all built on a pile and the ever expansion of a pile of paper gold. As long as there's confidence in the system, then we can have a big pile of paper gold to act as the M0 of the world. And then we can lever up a bigger extras pyramid of credit and asset valuations based on a big pile of paper gold. But the reality is that, the amount of physical gold that actually undermines all that paper gold is this big. And the physical gold that's out there that's being stored in central banks, we assume has been lent out, rehypothecated, multiple times over in order to lever up this paper gold price. I don't even think that matters anymore. I think the market and the gold market is so completely transparently corrupt that nobody cares. Everybody is just hedging their dollar exposure or their euro exposure against gold, and they don't actually want to settle in physical gold, which is why the price of physical gold or the price of paper gold doesn't move and is easily subjected to the kinds of crazy shocks that we've seen in the last couple of weeks since the Federal Reserve raised interest rates, and then when the Russians announced that they were going to peg the ruble to gold. And then the same thing, of course, and then silver is a derivative of that. And I'm also in the minority when I say silver is not a monetary metal anymore. It's a purely industrial metal. It trades like an industrial metal. And it's the suppression in silver is so bad at this point that it's not even trading with the industrial metals. Nickel's gone ballistic, aluminum's gone ballistic, tin, copper, lead, like all of them. And they've all gone ballistic, and copper's setting up for a move above $5 a pound. That's going to light everybody's hair on fire when it goes to $7, right? And what, silver's going to sit there at $25 an ounce? And you really believe that that's a real clearing price when silver eagles are trading for 45 on APMEX? Right? No, obviously not. But it's what they're doing. And they'll continue to do it for as long as they can do it. And there's a whiff of desperation, I think, within the market now that we have this situation with the Russians pegging the ruble to gold and thereby pegging the price of oil to gold, which the beginnings of that architecture started with the Shipi contract over in oil futures contract over in Shanghai, which can be converted with the profits off of that can be converted to a physical gold settled contract over there. Martin Armstrong has talked about this for years. He said, look, I advised Sheafy on this, make the oil contract convertible into gold so that people didn't have to hold yuan and they would have confidence in wanting to use your contract to settle, to use your contract, either to coordinate production or to speculate. But as long as they don't have to hold yuan and they can hold gold if they want, then you're going to get uptake on your contract. And that was the smartest thing the Chinese have ever done, I think. And now the Russians are doing the same thing. I think we've got a similar situation over in Dubai. So the gold market, the paper gold market itself is, I think, very much on its last legs, because the Russians have made it abundantly clear that they're tired of the West using their exorbitant privilege of handing them nothing and getting something in return, handing them what Zoltan Pozar calls inside money and getting outside money in return: oil, fertilizers, rocket engines, blah, blah, natural gas, titanium, cobalt, whatever. All the things that the Russians are really good at exporting, right? And by doing that, they're going to then, by tying the price of gold to the ruble, we now have a situation where they can destroy the paper gold market, because they're going to create a real run on what's left of the physical gold. And that's on the COMEX and the LBMA and everything else. So because once you've got that tie, right, the arbitrage is really simple. We saw the arbitrage ground out in 4 days. The ruble was trading at 96 to 100 on the day they made the announcement. 3 trading days later, it was trading at 83, which then it pushed the price of gold down a little bit, but they quickly came into balance with one another. That 5,000 rubles per gram hit, created a balance between the futures price of gold and the ruble, which was the first stage of the operation from the Russians' perspective. Let's get the ruble under control. Now they got the lever, because now they can alter the rate of ruble conversion to gold. Now they can watch their trade surplus strengthen the ruble, which will then create a situation where when the ruble is stronger than the price of gold relative to oil, well, people will then go get physical gold to buy oil with, because they're making money on it. It's a natural arb play. And when it's the opposite, well, they'll use rubles, and when and they'll just go back and forth. And what will happen is they'll do this stair step thing where they'll both rise in purchasing power together as we finally get a rebalancing of the price of physical gold relative to the actual demand for oil. Because what the whole paper gold and silver markets do is to suppress the price of real things, real commodities, the commodities that are needed to run the world, relative to the paper price, and to put the producers of these commodities on literally a residual poison drip feed. You're only allowed to make 0.5%, 1%, whatever it is, and they skim all the rest of the money, all the profit off the risk of exploration, transport, insurance, labor, all that stuff gets, that they take all that profit. It gets sucked up into the banking industry, which they then use to continue to bomb the paper, gold, and silver markets, which they use to build tanks and other weapons. And then, and they build all this massive war chest of political power to buy elections and buy senators and buy compromat and build BlackRock and, all this stuff. That's what they've done with it. And that's why wealth inequality has gotten out of control. That's why we've reached this limit and we can't go any farther. So we're at the moment where they can't issue any more debt relative to the amount of physical gold they have out there, because no one believes the debt will ever be paid back. And so now the Russians, at this moment in time, tying the price of gold to the ruble and thereby to oil and all the other commodities, they're going to collapse the paper gold market as a function of market mechanisms, which the big guys are not, what I call Davos, aren't in control of anymore. So that's where I see this. That's effectively what the article is talking about. And it was very clear to me that I've been waiting for the Russians to do this for years, but they needed to find the right and optimal moment to do so. And you do that after your opponent fires every financial nuclear weapon they have at you. and then you strike back. You have to wait for the right moment in order to be able to do that. If you pull that out too early, they'll just drain you of your gold, and then you're screwed. So what they've done now is the right thing to do. And remember, the Russians are only buying gold at that price. They're not selling it at that price, which is clearly a ruble play more than it is anything else. So.
Yeah, and I believe I think it was last Tuesday when the price was getting smashed. I didn't do the final math on the exact numbers, but it seems like it went down to within $10 of the implied floor. Is that correct?
Yeah, something like that. It got really, really close, and then it stopped. Yeah.
So
the free market still functions, Chris. I watched this happen. We watched this happen in real time, and like everybody's, we're also damn jaded and whatnot that we've been. Markets aren't real anymore. They're all they got everything under control. The free market, these aren't real markets. And then all of a sudden, the Russians go, oh, by the way, here's some reality, and the markets go weep, and they just grind out a 20% arbitrage in 3 days.
Yeah.
It's kind of cool. Like it's really life affirming to see that happen. Actually, to be honest with you, so.
Well, it feels like it's been so long since we've seen anything other than, we read the chat transcripts of Deutsche Bank traders bragging about smashing the price, then finding, right. I think it's still sinking in. The commissioner of the CFTC, who's a member of the plunge protection team, right, talking about tamping down the price. And he didn't just say it once. It wasn't a slip of the tongue. He talked about it twice in that segment. And also what I thought was interesting was that he acknowledged that these guys are damn afraid of it. So it's like a lot of this stuff, we're like, hey, does the government really care about the silver market? All these years we're like, why would they allow this? Why would they allow the banks to continue to do it? And in that segment, when he said, we had to tamp down what could have been a much worse situation. So it's like, hey, maybe it isn't just me imagining it all these years that these guys would be afraid of gold and silver prices skyrocketing, because that's effectively the end of their thing. Now coming back to what you just said, it's interesting because we saw with this whole thing with Russia and Ukraine and then the US before it started, they were Biden, Anthony Blinken. And where'd they find this guy, by the way? It's like Benjamin from Wayne's World.
Well, Blinken has been part of he's been part of the Nuland cabal within the State Department for years. He's just been, undersecretary below the radar. And so they brought him in. He's like, no, he's an old school neocon. Like he's a Paul Wolfowitz styled neocon. He's bad, is what he is. No, Blinken is bad.
He's like a Geithner Redux or something. But
no, he's worse than Geithner.
In either case, they tell Putin, don't do it. And what does Putin do? He does it. Then they say, don't do this, or we're going to respond with the sanctions. I forget the exact what he did at each point. But basically, each time he's been threatened, he's gone forward. And then what really stood out to me, and I know you dig into the geopolitics a lot, this was after gold had hit over $2,000, maybe a week or so after. And then we had that weekend where I see on a Saturday afternoon, Zero Hedge reporting that missiles were aimed at the U.S. consulate in Iraq. U.S. consulate that was set up after the war on weapons of mass destruction, which, by the way, they never admitted.
Well, it was actually the U.S. consulate outside of Erbil in northern Iraq in Kurdish territory. So it wasn't the big one. Right. That's just outside of Baghdad. It's the one we're setting up outside of Erbil, which is the capital of Kurdish controlled Iraq, where Barzani's Peshmerga are in charge. I know, unfortunately, I know way too much about this stuff too. I studied Syria like day to day for 3 years. So, and they were able to get away with, and the Iranians were able to get away with that, or the PMU forces within Iraq were able to get away with that and not cause a bigger incident because it wasn't technically a finished building at that point. So it wasn't technically U.S. consulate property yet, because it hadn't been officially turned over to the United States. It was still under construction. Apparently, that's the way those things work. I may be wrong about that, but that's the explanation that I heard that allowed us to not go completely ballistic and declare war on Iran. But go ahead. I'm sorry.
Right. So, and I heard, they were saying, well, it went near the consulate. So I'm like, at first, because when you see the footage and you see the missiles flying and exploding, and perhaps it was triggered something in me, because the sound I heard there instantly reminded me of the sound I heard when the second trade center got hit.
Right.
So I remember from that day, it was it was just always weird. It didn't, there's like that
Right.
car collision sound and versus, so me, on one hand, it was just a little jarring to see, but then I believe it was the next morning, we see that Russia had bombed a facility near the Polish border where the CIA had been doing training exercises in Ukraine. I'm thinking, well, whoa, CIA is doing training exercise in Ukraine. What up with that? But that aside, now it's, if we call it 1, 2, or 1.5, but military action against stuff where U.S. base or target is involved, which for my entire life, and again, my father was from Egypt, so at least somewhat familiar with some Middle Eastern culture, have studied the overthrow of Mohammad Mossadegh in Iran, and a lot of these things that led up to what happened in 1979, and like these things that were connected with the silver spike back then. I mean, I think it's one of those things that probably most of the rest of the world didn't even know it happened or see it. But to me, that at least what popped in was, oh my God, it's like after September 11th, after all these other things, it seems like all these other countries were afraid to say, maybe they would say it here or there. We're tired of U.S. bullying people around. Gaddafi or Saddam Hussein talk about gold, and then something happens there. But to see, and again, I guess it's debate, who knows what's actually really happening, but at least as reported, is that a sign? At the same time, Russia's saying directly, we're not afraid of your sanctions and we're not afraid of your threats via NATO. And then to see actual things blown up that have seem like
that where there are NATO trainers being, now the Russians used a Kinzhal weapon, a Kinzhal missile for that strike to the west of Kiev. That was twofold. One, get your NATO guys out of Ukraine. We're done with this nonsense. If they're there, they're enemy combatants. Two, this is what the Kinzhal is capable of doing, and you didn't even know it was coming. So, oh, by the way, leave our ships alone because your carriers are next. Okay. So if you don't think we don't have these weapons, if anybody in all the think tanks on K Street, and all the neocons in the National Security Council are being told, oh, well, the Russians don't really have what they say they have. And there's a lot of that talk within American foreign policy circles that they don't actually believe that the Russians can put out on paper and on the ground the things they say they can put, that they may have some prototype Su-30s or, T-90 armadas or whatever, but they don't have, enough to be able to fight a war with. Right. Do they even have these Kinzhal weapons? Well, guess what? We just bunker busted, a tank repair facility and NATO training center, Ukrainian army and NATO training center, near Lviv. Oh, by the way, that could have been, a NATO training center outside of Warsaw. Is that what you really want? So I think the thrust of your question is, are the Russians now basically saying we're not afraid of you anymore? And because of that, will that lead, the next question should come out of our mouths is, well, is that going to lead to a loss of confidence in the markets of U.S. foreign policy initiatives and the efficacy of NATO, the efficacy of our military to back up our financial colonization schemes, because that's what the dollar is. It's a financial colonization scheme. Is that process now going to reverse itself? Well, it seems like the Federal Reserve to me is actively trying to pull back. See, the more I think about this, let's go back to 2008, right? 2008, the dollar reserve standard died. Lehman Brothers blew up the dollar reserve standard. We have not been on the dollar reserve standard since 2008. We've been on the central bank cartel standard since then, where the central banks all go around and do round robin QE. Oh, I'm going to tighten now. So that means that, me, the Fed, we're going to tighten now. So you, Kuroda and Lagarde, you need to step up and print more. And then when they're done, then, the SNB and the BOE can do QE, and then I'll go back to the Fed, and then we'll just keep doing this and keep ratcheting everything up. Meanwhile, continually suppressing the price of gold and silver in order to tell everybody, no, really, the balance sheet expansion doesn't matter. Oh, no, it doesn't. All this debt doesn't matter. We don't need to pay it. We owe it to ourselves. What's the big deal? But that was the only way they could keep this thing running. That system was metastable, was never going to last. It lasted 14 years. Well, really, it lasted 12 years. And then there was COVID. Now, COVID was the blow off top, or the Misesian crack up boom of government stimulus. It's the last round of big government stimulus that anybody could do and still keep the numbers even somewhat close to ludicrous. Like, we only went to plaid to, invoke Spaceballs. It's like, what's beyond plaid? Oh, I don't know, but it's a new monetary system is what's beyond plaid, right? The more I think about this, the more I really begin to believe that the American banking, commercial banking community, it's a very powerful lobby. And I'm not just talking about the big money center banks in New York. I'm talking about the regional banks. I'm talking about state banks. Like, this is a very powerful lobby across the entire United States, because they're the ones who actually do the real lending for building new roads and new libraries and new schools. And they're the ones who do that lending. JP Morgan doesn't do that lending, right? So what is the Great Reset from the WEF's perspective? What is the whole purpose of this? What is the purpose? The purpose is to end the old monetary system, but leave the same people in charge. And I'll take it one step further. It's not even to leave the same people in charge. It's to transfer the power within the oligarchs cartel back to the Europeans from the Americans. Because the Americans have been running the show for the last 70 years. JP Morgan, Goldman Sachs, Morgan Stanley, BofA, Bank of New York Mellon, blah, 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 blah. But at the same time, City of London and BNP Paribas and ING and whatnot have always kind of they've always had the ability to shape what we do in some ways. And they've always we've been in cahoots together. And what was the glue holding them all together? LIBOR. LIBOR was the thing holding the whole thing together. LIBOR is the means by which the Eurodollar system was built, right? LIBOR is the means by which the Fed doesn't really have much control over its monetary policy. If you listen to Jeff Snyder over at Lombard Partners, right? Jeff's thesis has been for years that the Eurodollar system is actually sets monetary policy, and the Fed is just along for the ride. And for the most part, he's completely correct, because his thesis, and it's a fair one, which is that the offshore banking interest can create more dollars and credit than the Fed could ever hope to create. And so they actually set monetary policy. So when their loans start to blow up, because the Fed tried to tighten in order to get our situation under control here at home, they turn around and, the Eurodollar markets blow up, LIBOR blows out, and then the Fed has to respond, or at least it had to respond. Why? Does it no longer need to respond? SOFR.
Yeah.
2022, I haven't gotten there yet. This is important. This was the big one. In 2022, SOFR became the benchmark rate for all debt issued in the United States. And all the legacy debt has, over the last 4 years, has been reindexed to SOFR, except for about $40 to $50 billion worth of stuff. Now, when the Fed raises rates, LIBOR can blow out, but SOFR doesn't necessarily have to blow out, because now we're not beholden to the failing European banking system. So now that becomes a very interesting problem going forward, because now the Fed actually has some tools it can use to reassert its control over U.S. monetary policy. Now, whether it's doing it to our benefit or their own benefit or whatever, that fill in your motivation du jour. But my point is that the Great Reset was about introducing central bank digital currencies and doing away with the commercial banking interests. I just can't see the very powerful U.S. banking interest, commercial banking interest, giving that power up and handing it over to the IMF and the BIS. I just can't see, I can't see, and the ECB. I can't see that. I can't see Jamie Dimon handing ultimate power and control to Klaus Schwab. I mean, at the end of the day, they go to Bilderberg or they go to friggin' Davos, and the two of them sit there and they have a chat, and he goes, and Dimon just looks at Schwab and goes, "You do know that I'm going to fight you on this tooth and nail to the end, right? Like, I'm not giving you JP Morgan." And so when you stop to really think about the last 4 years at the Fed, it's the introduction of SOFR and the appointment of Powell and John Williams to the Fed that got that done and has been fought bitterly by all of the bad guys. And the big problem here is that Trump didn't understand any of this, because Trump is he's a property developer from Queens that likes debt and thinks he can just grow his way out of debt. And so that's why he was complaining about Powell during his presidency, because Powell kept pulling back on liquidity and trying to force a crisis. And I'm at the point now where I think that they unleashed COVID on us, for Christ's sake, in order to crash the system, to force the Fed to monetize another big round another big round to try and keep the system going for another couple of years. And I think they've run out of room, because the Fed is going to raise aggressively going forward into negative interest rates, because they have to, negative real rates, because they have to. Otherwise, they lose all their credibility. And that goes back to the whole argument about gold and silver. But at the same time, the Russians are saying, oh, by the way, we're going to collapse the paper gold market, and we're going to end the petrodollar. And the Fed is sitting there staring at an ocean of dollars that have been sequestered overseas, physical dollars. There's more hundreds in existence. Martin Armstrong makes this point all the time. There's more hundreds in existence than there are singles. There are stacks of Benjamins stuffed under mattresses all around the world. Those Benjamins are going to flow once they aren't useful anymore, and they're all going to get repatriated. So the Fed has to be able to sop up that excess liquidity to keep the dollar from being destroyed in the short term. And so if you really start to put it all together, the big play here for the Fed is to drain the Eurodollar markets, allow LIBOR to blow out. SOFR doesn't blow out to the same extent. They manage that, and they've got the ability to manage any problems within the money markets, because we have control over our own money markets again. And the European banks all get slaughtered. And as the petrodollar starts to unwind overseas very quickly, the Fed sops up the liquidity and defends the dollar. And as Europe collapses, all that capital comes to the United States. But the Fed's credibility is still shot in everybody's mind. So what's going to happen? The very weird thing that we had at the end of the 1970s, stagflation at home, rising interest rates, a rising gold price, a rising silver price, and a rising oil price, rising commodity prices. Oh, we'll add Bitcoin to the mix as well. And that's what's going to happen for about 1.5 years to 2 years. And that's going to send the dollar to the moon. And then the United States is going to crash, because then we won't be able to export anything because the dollar will be too strong. And then the whole thing starts to collapse. I think I understood the mechanisms of this. For 9 months, I've been sitting here going, how is the Fed going to pull this off? They're obviously trying, right? Because they started stealth tightening when they raised the reverse repo rate by 5 basis points back in June, and raised the balance on reverse repos from $450 billion to about 1.7. Most of that came from the overseas Eurodollar markets. When the Fed raised interest rates the other day by 25 basis points, the Eurodollar futures curve across the whole of the 2023 maturity curve dropped by over a point. Clear stress in that market. In the couple of weeks leading up to the Fed's rate raise, when the markets finally started to believe that the Fed was actually going to raise rates, because the markets didn't believe this. The LIBOR SOFR spread went from 30 points negative biased in favor of LIBOR to negative 20 basis points to positive 20 basis points relative to balance for SOFR. So it was a 50 basis point swing in the 1 month money market rate between LIBOR and SOFR. So it's all laying right out there in front of you. Those three little data points alone tell you exactly what's happening. That's the big play. Europe is going to get crushed. And what happened while all of this was playing out? The Japanese, as the good, dutiful servants to globalism that they are, announced QQE, oh my God, BBQ sauce. QE eternity. We'll just destroy the entire balance sheet of Japan to try and bail out Europe for another 6 months.
They were already trying pretty hard before that over in Japan.
I know.
This is after Shinzo Abe's term. And Tom, if I could just mix a quick question in there,
sure,
because it's something I was thinking about. What you're mentioning, I saw the other day that I believe it's priced in 200 basis points over the next 6 meetings. So they said
Yeah,
there's a single chart that basically that would be that they're going to hike at least, maybe there could be
they're
some
going to
bigger
go
ones,
50 in May. They're going to
but
go 50 basis points in May.
4 regular and then 2 50-pointers or some mix like that. So the next 6 meetings this year, and if we're at a quarter to a half now, basically that would actually get us right back to where we were in December of 2018. And we saw how quickly everything collapsed then.
Yes.
I'm guessing with more debt and leverage than even 2018,
Or with less control over the markets. Remember, the Fed has created us 2 things since then. One, SOFR is now the law of the land. In December 2018, very little of the debt had been turned over, so LIBOR was still important. And LIBOR blew out, and the ECB went ballistic, and then the Fed had to respond right after that. And I'm not saying that the Fed's going to be able to normalize rates, Chris. Don't get me wrong here. I think 2% on if the Fed goes back to 2%, I think the world economy I think the world financial systems collapse. Right. But I think that's what has to happen. I think the Fed is finally not afraid of it anymore because they have a path out of it, because they can actually rein. Because if they're doing that, then they can turn to Congress and say, you know what? You can't spend $6 trillion on tranny bathrooms. Okay, you can't do it. Sorry, no UBI, no tranny bathrooms, no solar panels to nowhere, none of this stuff. That all has to go away. We need to reform entitlements. We need to get serious about reforming pension systems around the country. We need to get serious about this, and we can do this. And we need to cut back and scale back the military. Now, is any of that going to happen while Biden, Pelosi, and Schumer are in charge? Of course not. Why? They work for Davos, who are trying to force the Fed, as all of these spending bills are blackmail. You will monetize this debt because there's no foreign appetite for any more U.S. Treasury debt. So it's a game of blackmail. The Build Back Better bill was the biggest piece of political blackmail or financial blackmail in human history. It's all it was. They lied to us, said that it was revenue neutral. The Office of Budget Management comes out, the OMB comes out and says, oh, by the way, it's going to cost $6.5 trillion, all front loaded, mind you, in the first 3 or 4 years of the bill, right? So where were we going to get the money for that? The Fed was going to have to print it and double its balance sheet, right? So it's just blackmail. That would mean that the Fed has to stay at the zero bound. They would have to do this, and then that would give and that would set the situation up where the ECB only prints $700 billion, $800 billion, and we print 6.5. What's global? What are the capital markets going to say to that? Well, I'm going to keep my money in Europe because Europe's not nearly as crazy as the Americans are. The whole purpose of all of these moves politically was to keep capital from fleeing out of the smoking hole that is the European banking system. These people are all bankrupt. The whole European banking system should be gone. It is only still there by the grace of people's forbearance and thinking that Davos still has some power in the world. And Putin and Powell are both saying, oh, by the way, I'm taking away both of your levers of power. I'm taking away the Eurodollar markets on the Fed's part, and I'm taking away the petrodollar on and the paper gold market on the other side of it. And I don't even think that the Fed's upset about this, because what this will do is actually limit the upside on the price of gold, which the Fed wants, because the Fed wants the dollar to remain somewhat credible. And so they can't allow the price of gold to rise too far, but they can allow it to go to $5,000, $6,000, $7,000 an ounce, where it should be at 60, right? I mean, if we were to norm out all the paper gold, where should it be? 100 times its current price? Because there's 100 ounces of paper gold for every ounce of gold they've got physical. And if nobody wants to disgorge any of their gold reserves to back their currencies, well, then we got to let the price of gold go to $190,000 an ounce. Of course, they'll never allow that to happen. But if they can get the price of gold to 7 or 8 or 9 by the end of this situation, that would be a win. Same way we went from $100 to $880 under Volcker, right? Or really over the course of the 70s from 35 to 880. So we might see a similar rise. I'm thinking from about when the second leg of the gold bull market in the 70s started between $100 and $200 an ounce, when it really started to break out to about 1975 and then ran to 880. I'm thinking about a seven times multiplier will be politically okay. Because here's the thing. Remember, the ECB only survives this as their sovereign debt explodes and collapses. The only thing offsetting that is their gold reserves, because they mark their gold to market. So they can keep the balance sheet high by allowing the price of gold to go to, $30,000 an ounce. So now let's bring in Basel III. Basel III. The Basel III rules were designed to advantage the European banks and break City of London's control over the gold price, the paper gold price. Because actually Basel III was trying to encourage a rising physical price in order to help the ECB offset their losses in their bond markets. They could see this coming. And guess what happened? They had to announce the other day I saw an article 2 weeks ago. We're going to suspend Basel III net reporting, quarterly reporting until 2023. City of London won that fight, and Europe had to go along with it. So guess what? That's not coming. So I think gold and silver are going to do well, but I don't think it's going to be stratospheric. I still think probably the gold miners will, and the silver miners, as that are properly leveraged to the price rise. I think they're the ones that are going to outperform in the long run, which is why I think we're starting to see the miners outperform the price of physical gold. That the ratio of GDX to gold is finally starting to break out of a long-term downtrend. So,
yeah, interesting. You mentioned the miners. Actually, had a note pulled up here. Newmont stakes out new all-time high as gold miners make broad rally.
Yep.
Silver miners has kind of been up and down throughout that. But yeah, and especially what you just mentioned there with the whole Basel III thing. I guess that's where it maybe sometimes you just have to let time play out, because at least to the degree, if somebody ever wants their money back on this, outstanding debt, all these other obligations, the thing that always struck me as odd and which made me feel not only did you eventually have to do a reset, but that it's almost wonder why the banks would be so against it, because all right, you settle your cash, there's your $25 on the Comex, your $2,000, and they could set. In fact, you even mentioned they have the gold, so the bigger the price, hey, 100,000 gold. Why don't we make it 200,000? We'll have some chips left over. So
I think we're in that state. Think about what FDR did. FDR did a stealth hyperinflation of the US dollar in 1933. I love Martin Armstrong, but he's wrong to say that the United States has never gone through hyperinflation. He says this I'm like, yeah, we did. In October of 1933, the dollar was pegged to $20.67 ounce, the dollars to the ounce. In November of 1933, after the banks were closed for months, it was $35 an ounce. That's a 6,000% annual depreciation of the dollar. What do you say that's not a hyperinflation? Okay, it wasn't a society destroying, pernicious hyperinflation of the Weimar type, but it was still a hyperinflation. So we're going to we'll probably wind up with a similar situation here, where the banks will get closed. They'll revalue the price of gold. They'll of course revalue it too low, and it will be a stopgap. They'll probably have to do it 2 or 3 times as they, allow reality to take over. And at some point, the big question I have is, at what point do the people who are, I think there are sincere people within the American government and the American banking institution, the quote unquote American oligarchy, who are upset with the ones that are working for the Europeans, for lack of a better term, that are like Biden and those guys. They're to me, they're Davos, like Obama and Biden and Blinken, they're Davos, right? And then and that we've got a commercial banking sector, and that's not monolithic, by the way. There are commercial banks that are definitely down with Davos, and there are commercial banks that are definitely not. And identifying who's who is very important. BlackRock is obviously Davos. Like Goldman Sachs is obviously Davos. But Goldman Sachs doesn't care. They will switch sides in a heartbeat if they think that the other side's winning. I think JP Morgan is the one actually driving this. And that's my personal opinion, just having watched Diamond for the last few years about this. because it was JP Morgan that actually stopped taking European debt as collateral back in 2018, which is what created the repo crisis, or 2018, early 2019, which created the September 2019 the repo blowout, right? The SOFR blowout, which created the repo event, right? 6 months before COVID. That was precipitated because JP Morgan refused to take any European debt as collateral for repo transactions or anything else. They just refused to do any business with each other because they're like, no, your debt's garbage. I'm not taking it. No. To me, that was a big shot across the bow to, no, you get your house cleaned up. We're not monetizing your debt anymore. We're not going to help you do this anymore. And so I think Morgan is probably looking at their situation on the COMEX and the LBMA and trying to figure out how to best get out of the massive short position they're in, which may take some time, which is why we're seeing some of these massive smackdowns in price in order to try and unwind their book, as it were, so that, because the Chinese I think have made it abundantly clear that they can destroy the LME in a heartbeat because they own it. And all they got to do is get one guy over in China to stand on one side of the nickel trade and then blow up the entire market and blow up the entire exchange and the validity of the entire exchange. And to be honest with you, at this point, I don't see why the Chinese wouldn't blow up the LME. They own it. They paid $1 billion for it. I'm sure they've made $1 billion running it. So to them, it's just, hey, we can blow this up and fire a second strike back at our quote unquote enemies. That's the way I see the LME thing. To me, it just seems very obvious that it was, a way to support Russia's invasion of Ukraine. Very carefully, with a little bit of asymmetric warfare. Like, how do you make everybody in the United States stand up and pay attention? You blow up the nickel market. You don't blow up the gold market. You blow up the nickel market, because if you blow up the gold market, the whole financial system teeters. You blow up the nickel market, everybody goes, wow, dude, what was that all about? But it's not enough to create, ripple effects and contagion effects that would undermine the entire system. But it does make everybody stand up and take notice and go, what happens when somebody's so massively on the wrong side of the trade that they can't get out of it? And now we apply that to silver or to gold. And so I think there's a lot of blackmail going on in these markets, is what I see.
It sure does seem like it. And wow, I can't thank you enough. I appreciate everything you shared here, because you have quite an understanding, and not just the geopolitics, but the banking side as well. And remember my internship at Merrill Lynch when I was sitting next to the Eurodollar trader, and it's still like making my head steam, like, why are they doing this? And so some complex topics in there, and I appreciate you simplifying that in a way people can actually understand. And Tom, what is the best way to follow you? And if there's any, I know you'll pull up your website here, but
Sure.
anything that you'd mention that people should be well served to be aware of?
Sure. Well, everything runs through my blog over tomluongo.me. There it is up on the screen right now. And you can get a hold of the Patreon, which is right there on the right gutter, and you can subscribe to the podcast. It's all right there. The Patreon, we do a monthly investment newsletter, kind of a classic retail once a month investor newsletter with a full portfolio designed around all of these ideas and how to profit from them. I've been in, gold, silver, commodities, and crypto for 4 years now. I think we've been running 4.5 years now. We're in the middle of year 5, and I think we've gotten a 20% annualized return over each year, over 5 years, over 4.5 years. So I think that's where we're standing right now. But then I also do twice weekly market reports, which cover not just talking points like today, but I also do my own technical analysis of the big markets. So, I cover gold and silver and the Dow and the Eurodollar and whatnot, and try and tie all this together that way. And then private pod push as well for my patrons. So I give them a lot for very little. And I take care of them first, and then whatever else winds up in the rest of the world. But that's where then we do the public stuff, but that's where it all is. So.
Well, I sure appreciate that. And Tom, you're certainly on my list of people that, well, if we had him instead of Joe Biden and Benjamin Blinken in the White House, interesting to think.
It,
And
it
I
would
guess
be
that's
It'd be
go ahead.
really interesting. What would be really interesting is I'm waiting for the day that Powell stands up and goes, you know what? You're going to try and blackmail me 75 basis points. Okay. That's the way I would look. Because I'm Italian. So like, I don't care. Like, oh, you're going to blackmail me. Oh, that's a point. What? Do you blackmail me again? Oh, a point and a quarter. We can do this all day. I got 3 points. Like, I'll do this. Like, I will burn this thing to the ground until you people understand that you are not in control anymore. I am the head of the Federal Reserve. I am the most powerful man in the world. You, Nancy Pelosi, Chuck Schumer, Klaus Schwab, or whoever, you're just, a German eugenicist in a banana hammock. Like,
Well,
no, with a metal detector, go away.
when Mr. Luongo is ready to go to Washington, you call me up. I will be there with the camera crew.
I have no interest in that. You imagine?
I just like guys, see a Rambo going through.
Oh my God! No,
like, oh,
I used to do Periscopes years ago when I first started. I used to do this on Periscope with my phone. Like, this is me and my phone, and we used to talk about this like right around the time that Trump was inaugurated. Like, you guys have no idea what it will look like on my inauguration day. Like, because I would have already bombed all the poppy fields in Afghanistan. It was just bad. So we can't talk about President Luongo. Would just be not a good thing for the world. No, this is very interesting. I mean, all I'm trying to do here, and again, one of the things I'm going to stress before we leave is this: none of what I've said here today is set in stone. It's what I see. And I'm happy to be error checked, corrected, or told I'm completely full of it, because I read the tea leaves and then I go, okay, well, these things all seem to make sense. Let's run this idea out by the world and then see what they have to say. And, it's because of that my community now has attracted, as patrons, have attracted a lot of professionals who we're now all chatting amongst ourselves going, yeah, that makes sense. And then I was speaking to a buddy over at JP Morgan the other day, and he said this, and now all of a sudden you're like, yeah, this makes sense. So like, we don't know what's really happening. Like, we don't know what's going on the ground in Ukraine. We don't really know what's going on in the National Security Council. The factions are all, very murky. People are changing sides every day, and it's a very fluid situation. It's a war. It's a war between oligarchs. It's a war between civilizations. It's a war between them and us. It's against the people. It's a multifaceted and multifactional war, and cartels. And I operate under one rubric: cartels are metastable, meaning at some point someone's always going to break with the cartel, and when someone breaks with the cartel, and when it's in their investment, it's in their best interest to do so, they will. And that's why I'm willing to entertain the idea that the Fed is willing to break with the cartel of the rest of the central banks in order to reassert its sovereignty, because it is under existential threat otherwise, and it's not going to exist in 5 years or 10 years if they don't. So it makes sense that they would. And then all you have to then ask yourself is, how are they doing that? How is that expressing itself out in the real world? What do you see to support that idea? And then if you start to see enough data points that it starts to make sense. I mean, we didn't even go into why I even think that I'm right about this, which is that they tried to get rid of Powell and all of the hawks on the Federal Reserve Board in order to install outright freaking commies on, Lael Brainerd and Sarah Bloom Raskin and all the rest of these idiots. Like, it's what they did. And so it was real. We had the last political coup in the United States was they were trying to go after the Fed chairman and install, an MMT commie, Lael Brainerd. And that could have been the end of the United States. That's how close we were. And if that were the case, dude, I would be like on a beach in Panama. Like, I'm like, I'm not staying here. As good as Florida is, which is where I am, like, they'll destroy. There's no stopping what they'll do at that point if they were to get that done.
That's why I crossed the border, and fortunately, I'll be looking forward to being able to re-listen to this. And again, Tom Luongo of Gold, Goats and Guns. Sure appreciate you making some time and sharing this with everyone. And we'll have to do this again soon, Tom.
Absolutely, Chris. You call me whenever you like.
Well, there you go. That is today's episode of the show. Again, thank you to BlackRock and Andrew Pollard for bringing us this episode. Hope everybody enjoyed that. Hit the subscribe button and the notification bell, and I will see you again tomorrow.